Welcome to Big Picture Trading. All right. Welcome back to another episode of Chart Talk. Let's jump right into it. So we have the Qs and the S&P both very much in this same breakout stage we've been in pretty much since May. All summer, grinding higher, very clear breakout stage, very tight range, but as tight and as small as these ranges continue to get, with each passing, week and month, this range here is insanely small here compared to just some, actual price action here. It's just getting tighter and tighter and tighter on the way up. And eventually that tightness has to expand. It can't just keep getting, we can't go from 5% ranges to 4% to 3%, 2% to 0.5% ranges and that continue. That eventually has to, expand and change the trend that it's been on. But as of late, we don't fight the trend. Very clear breakout stage. Right now we got to really zoom in here because this price action is so small that we have in the Qs, Qs retesting pretty much all-time highs today. On this is what Wednesday, put in this mini pivot low. This is a 12-point range. This is like 1%. This is normally 1 day's price action, where right now it's 3 days price action. So we're seeing the same thing here in the S&P. Again, I'm going to zoom in a little bit more to give you an idea. So again, we can see what's been going on since May. Very clear breakout stage, very healthy, very strong. And I'm going to zoom out, go to a monthly really quick, and we can see, and delete some of these lines here. We can see this massive trend line that goes back a couple of years. And now if we zoom out even more, let me delete some of these lines. We can see going, I gotta zoom out. Give me a second. This is the MOAT, the mother of all trend lines, that has been intact. This is going back to 2017 for the most part. This trend line has not been able to break the resistance area. And as of late, we are getting very, very close to touching it. So this is, again, market has been on fire. Market has been extremely easy from a trading standpoint. Everything has been working. We're starting to see these parabolic moves. You're seeing AQUA up 100%. You're seeing RGTI up 100%. You're seeing Oracle up, 40, 50%. You're seeing Intel up 30%. You're seeing BABA up 80% in a few months. We're starting to see these parabolic moves, even in Robinhood today, 10% plus move after the run it's been on. These are these, kind of parabolic moves you start to see at the end of market rallies when the thinking is the market's so strong, it's going to continue higher. But this has not changed for nearly 10, 7, 8 years. This resistance has held. When the market was here, that same thinking was, in play here. So when the market gets super easy at the end of these massive runs, again, we were very, very bullish in April down here. Very hard time to be very bullish. That was the time to do it when the market came into the trend line. We had 1 day to buy SPY 490, and not even 1 day. You had 15 minutes to an hour off the open on that day to really get that buy. Very difficult buy. Up here, super easy market, everything's working. This is when the market makes everything feel easier to get you in, to keep pushing it higher. But this is going to be resistance. This area is going to act as resistance. On my end, I'd like to see, again, we're going to see this test. It's more of a statement. I think anyone can make that statement that will test this. And as long as we stay in the breakout channel that we've been in, we're not going to fight the trend. The trend is going towards this area. There's really no disputing that. But once we do touch this area, like we saw, this is again 3 months. These are monthly candles. So the last time in 2022, we spent 2 or 3 months up here. And again, it's hard to remember, the price action of 2022, but this is when tech names were on fire. Shopify, Amazon, NVIDIA, Google, Apple, every name at that time. I remember talking with members. This was a time when everyone was trying to be a long-term investor in tech names, and it was the easiest time in the market. And then what happened? We had an extremely difficult 6 months. Very slow bear market pull-in. We based out phenomenally, and then we've since pushed higher. And we had a little bit of this action earlier this year with the tariff war. We had that really fast pulling, which was great because I mean, this sucked. This 6 months was just brutal. This price action, it was just very slow, and every day, every pop was getting sold off. So, but right at this point, beginning of 2022, going into that new year, we saw the same price action we're seeing now. All those tech names were the high flyers. They were only going to go higher. Shopify was going to go up another 100%. NVIDIA was going to go up 100%. And all those names got taken to the woodshed. Most of them still haven't even reclaimed them, obviously, minus the big names like NVIDIA. But we're seeing, kind of that same action up here. So this isn't, it's going to touch this tomorrow and it's going to crash. We could sit up here for 2, 3 more months of this easy price action, but eventually we have to somewhat expect this channel to stay in place. And the only way this can go is that it needs to pull back in and trade sideways so that it sets the market up to eventually retest this high again and this high again. But we need that sideways action to, kind of draw this trend line out more where this area becomes resistant with time. Where right now, this is resistance. This 670, round up and call it 700 is the key resistance level where 500 is support. So we don't want to fight the trend. We don't want to overthink these things, but we need to keep in the back of our mind that when this action gets this easy and the market gets this tight, it makes it very easy for traders to get in. Oh, I'm just going to buy the new all-time high. And if we take out this little pivot low here, I'll get out. So you have very tight risk at the end of these moves because the market's trying to lure us in with easy price action. If this range was 10% up here, everyone would be like, nah, I'll wait for it to tighten up. So we want to be aware of that. Again, gold, you know, on fire, inflation hedge. This gold chart is insane. This looks like a, Bitcoin chart, breaking out of, 70,000 early this year. Crazy run this gold has been on. Amazing cup and handle. Again, macro pattern going over, a 10-year pattern here. And now it's breaking out. That's what these things do. 10 years of consolidating under that level, you get, very strong breakouts that follow. So again, definitely feels, a bit toppy up here. But if you're in gold, you got a great price, the trend is definitely your friend right now. Small caps, we can see, again, I'm trying to focus on these very macro patterns here. This small caps, this pattern has breakout the all-time highs. This is going back 4 years. This isn't like a week of trading. This is 4 years. This name could not break this all-time high. Recently, kind of flirting with it. Last couple weeks, kind of just inside days here. Again, big runoff lows. Little tight inside days here. Not going to expect an insane breakout through here. But if it pulls out, pulls back in, shakes out a bit, this looks very similar. The duration isn't as long, but if you look at gold, let's go to a monthly. We have the high, we have the retest, we have the consolidation, tight inside months here, and then the breakout that follows. So small caps, kind of the same thing here. Just hasn't had that little tight consolidation just yet under this level, like we saw with gold, and half the duration of time, but still very strong. And we saw with the Dow, I'm going to switch over to a weekly, so it's a little more noticeable. We had the Dow, same thing. We had those all-time highs. First all-time high, retest off the mount resistance. You'll hear me say this constantly. This is not the time we ever want to buy anything. And then it gets back up there, sets up, breaks out, and has yet to retest. Again, you can see this note here. I have alerts set to remind us that when the Dow pulls back into here, we want to see that support, that resistance flip into support. So if this breaks below it, hence the red line, get out of Dodge. If it holds here, that's going to become the new floor, new area of support. So some key things for the major markets again. S&P, don't fight the trend. We're in this tight breakout stage, but we're getting very close to a macro resistance level that has held for nearly a decade. Do not expect that to change. And the price action we're seeing is dictating that, making it very easy to get in, showing parabolic runs in individual names, kind of luring traders in to buy the end of the move. But these end of the move times can be months. This isn't one day's price action. We can hang up, flirt with 700 in the SPY for the next 3, 4 months, be totally fine. So some key sectors, again, tech. I'm going to switch to some daily charts. Again, same trend we're seeing in the indexes. We do not want to fight the trend. Tech has been the leader. Consumer discretionaries. We can see that blue sky breakout forming. Again, we have all-time highs. We have the retest area. We don't want to buy that. We get the third attempt. Again, not ready. Pulls back in. Still forming a higher pivot low. Great to see. And eventually, we'll see consumer discretionaries break out to all-time highs. Again, very close this past week. So very strong sector. Expect to see some rotation there. Healthcare, again, we were expecting more of a breakout of this base. Has not been ready. Pulled back in. Still basing out is what it is. Still keeping a close eye on that sneaky buyback. So sneaky buyback, very simply, we were expecting the breakout here. Didn't really get it. Fades back into support, falls off of the trader's radar, and that example would be us. And then it comes, doesn't really break down. Sure, it shakes out of this mini pivot here, but gaps do get filled. And, it filled a gap. And now this is when most of the times the trader would forget about the idea. And that's typically when it's going to go and interest higher. So this is that sneaky buyback out of this base break. So keeping a close on healthcare, but again, easier to focus on the relative strength, like tech, like consumer discretionaries, and even these industrials. So industrials, all-time high here. We have the retest. Can we talk about we don't ever buy the retest? I'm going to zoom in more so it's easier for you to see this if you're watching. So you have all-time high, retest, which we never buy. Third attempt, okay, we start to see buyers pushing it higher. And what is important here is the buyers step up. So this was support since July. And as of late, after it took out that high, buyers stepped up just marginally, nothing crazy. Buyers have stepped up, much tighter risk than it was in the past, and setting up for that blue sky breakout. So tech strong, consumer discretionary is very strong, industrial is very strong, healthcare kind of on the back burner, waiting for that setup. Energy has been very strong recently, seeing some little bit of weakness. So kind of a temporary pause there. And we can move on to some top ideas. So coming into the week, again, energy has been strong going into Friday. Energy was strong, and one of the best charts out there in the energy sector is this shell. So I'm going to zoom out for a moment. I'm going to really zoom out. And going back to 2018, Shell has not been able to trade or close above $74 a share. Sure, 10 plus years ago, back in 2010, 2012, was able to, but since 2018 has not been able to successfully close above $74 a share. So we have that high, we have that retest, we have a third attempt, and now we have a fourth macro attempt. These are, again, monthly candles here. So this isn't like, try to 4 times this last week. 4 times with monthly candles, it could not get above that 74. And what we see recently, I'm going to keep zooming in as best as I can so it's easy for you to follow along here. Gets up to 74 beginning of the year. $4 range, breaks down, drops as low as 60. So, sellers very much still in control. Recently, the past few months now, past 3 to 4 months, gets back to 74, gets crushed. Past few months now, a lot of inside weeks, a lot of inside days. I switch to a daily candle, daily chart, but we can see the buyers have stepped up where 60 was support all last year, most of this year. Now name can't trade below 70. Recently, same thing, can't really trade below 70. So keeping a close eye here. Again, energy had a very strong run up recently, even from our alert here. It's been very strong. And now it's seeing a little bit of weakness. So Shell's still holding up very well. I'm almost a little glad it's kind of pulling in and didn't, tick through it today. But this is, when energy can pull into support, and this could be a couple of days that it needs. We want to we want to see this shell pull in and not get anywhere really close to 70. We want to really see this thing, pull into like 71 and then work its way back to 74. And again, same thing here is I only care about buying when 74 breaks. And to stick on this same example of buying or waiting for the confirmation, we have NVDA. So we have NVIDIA even today looked like it was going to go, but didn't, the buyers just were not there. So we can see pretty much since, we'll call it beginning of August, this, what could be a topping pattern in NVIDIA. We had very clear breakout stage. We have back up a second or two just to get us up to real, what's going on today. We have breakdown stage. We have stage one base. We have stage two breakout. And now we have what could be stage three topping pattern. But for now, it's massive bull flag, one of the strongest stocks in the market. For now, it's bull flag. It's not a topping pattern. If we see a break below this 162, confirmation of a topping pattern, and then you should expect to see price action like we saw here. But that's only if and when 162 breaks. Expect this price action and avoid this like the plague. But for now, if it can break above 184, still in a breakout stage, it's just a big flag. And on my end, I'm only waiting for the confirmation of this break of 184. So if we can look and we can see, can't break it, first attempt, couple of inside days here, can't break it, second attempt, this area, third attempt, can't break it, fourth attempt, big bullish engulfing bar. Can't take it out, can't close above it. And then today, this is kind of like that shell action I'm looking for. A little bit of a pull in. You see the higher pivot low compared to any of these prior pivots. Buyers are stepping up. We can see that. And they're fighting with this 184. So that's what I'm looking for with Shell. I want to see this action, these couple day pull in, and it rockets back up. And we're going to really zoom in here to show this 184. We can see very clearly where the seller is. There's just someone or many people just offering out 184 and holding NVIDIA down. And even today, these aren't like coincidences when these price levels hold to the penny. This is NVIDIA today, opens up amazing, runs right up to 184, and to the nickel. The high of the day is 184 perfectly. That's because there's sellers there, and we want to wait for that break of 184. When we get that break of 184, we get a close above 184, NVIDIA most likely trades to about 200 plus a share. You probably get a move from this 164. Yeah, so pretty much like 204 would be the target once we get a confirmation of 184 to break and close above it. So those are the two best charts in my opinion right now that I can find. Is the shell through 74 when energy wakes back up after settling out, and then NVIDIA 184 with a break and close above it. So other than those top two, we can run through a couple other ideas that are setting up. So we have Polaris, the ATV fans out there, big base here through this 60, multiple attempts. You can see all these little arrows here. Has not been able to break the 60, getting very tight and getting very close, 50 cents away from breaking that stage one base. We have this RRR, blue sky breakout setting up. So just like a weekly, has never traded above $64 a share. We are big fans of buying stocks when they're most expensive, that's when they typically get those pushes higher with much more ease than trying to bottom pick it down here. So triple R 364 looks great. This Roku, massive stage one base here through 103. Again, I'm emphasizing how big these arrows are for how long this has been setting up. This is going back to 2022. This thing has not really closed above 103 in a couple of years. So keeping a very close eye on this Roku. And waiting for that break of that 103. So it looks really great there. Triple M, again, these are weekly charts. You can see this is the third major attempt of it trying to break this 625. We can see compared to the last few attempts, gets up there, pulls in 200 points, gets up there, pulls in 200 points, gets up here this time, much tighter. This is, 40-point range versus 200, much tighter risk and multiple attempts. So MLM 625 looks phenomenal. NVDA we spoke about. This Lin, same thing. We're looking at weekly charts here. 485, textbook breakout. This BSX, we were looking at it for that 108 breakout. Just didn't have the momentum. Thing got crushed, pulls in 10+%. Pretty much fills the gap here. And we're starting to see the start of a new support area in this, $5 range. So eventually, if 108 is going to break, and we don't want to have to be perfect buying 108, we can wait for this support buyback up through 100 to climb back up towards 108 and be prepared for that breakout. So this is more really low on the list, but keeping in the back of mind because this 108 is a pretty significant level. Garmin, one of our buddies in the chat is in this, breaking out. Looks phenomenal. Stick with it. Prior all-time highs here at this 246. So expect some resistance here. Again, this is going to be, like we talked about before, we don't buy the first retest. We do want to sell it though. So here's all-time high. Tomorrow you probably get that push through that doji at highs after this nice run up. So, tomorrow through highs and doesn't close like it did today. You don't get that bullish gulf and close tomorrow through highs and you get, this kind of doji action tomorrow. That would, you see this candle here tomorrow. That's a sign to take profits. The one main swing that I've been holding that's hopefully turning into a little bit longer of a swing. It's been this Tesla that we called very nicely through this 360. It's been, grinding higher, still under the 5 EMA, which is nice to see. We have, this 489 is going to be the retest area. Again, you can see here, first target. So I'm either trying to sell some up here at 490 or give it back to break even. That's pretty much the two outcomes of this trade, in my opinion, for now. Still think it could go higher, but first major retest, got to get past that and see if it can really push through new all-time highs. So really not doing much with this, no micromanaging, just letting it work. Some other longer-term names is Baba. Not doing anything with it. Again, getting very close to the upper end of this channel. Again, huge run recently, but this is a long-term hold. Just waiting for, whenever weakness comes in, start adding back to it, but letting that winner work. Intel was another one out of this base, finally waking back up again, kind of a laggard, old Dow 30 name, but getting the love. We can see 36 is now this new resistance area. We can again see these prior pivots still acting as resistance. So we got this big range here. 28 to 36 is now the new base. And we should expect to see a trade within this range. Maybe it takes another, few months, but then you have the next level up here, 50. And more often than not, we probably see that move to there. Just this new setup is going to take months to develop. Took Intel an entire year to base out here. So, this was really great 3-4 day move, but we shouldn't expect this to continue in a name like Intel. So moving on, we got some alerts that are still grinding higher. This GLW is one of them. We had that breakout through 66, still just trending higher. No real reason to get out. Very clear level to get out if and when this trade turns down through this 76 area. Looks great. KNSA really woke up today. Through this 34 breakout, we saw this new, mini base of support. Under 35 was that new stop. Today finally woke up, gapped up, gap and go. Great to see for this name. Should continue higher. This is now the new, key area to get out below. So we're going to move on to some of the top member ideas that have been mentioned recently in the chat. I'm going to, kind of fire through these and focus on the ones that, look as ready as can be. Again, this RVMD, big day today. But if you weren't in from yesterday or buying through, today's high, today's open, really not much to do here. It's, kind of too wide of a range. It's kind of like that in Intel right now, 348 up move, wide range, not much to do. So RVMD is going to be a pass if you're not already in. CRSP. So kind of stuck here. It's been stuck for quite some time. We're going back almost 8 years now. Stuck in this channel. Again, eventually when this thing can break, this probably this 74 area, you probably see a much, much more quicker move, to even like 125. Right now, I wouldn't waste your time on this name. It's just been stuck in this range for way too long to, try to find tighter setups in this. Again, you can't even see what these candles are, but key resistance is 74, 75. Wait for whatever setup that is there. I would not waste your time with it now because best case, you're going to get a move to that area and it's going to act as resistance for months on end. So wait for that setup. Pass on it for now. ADI, let's see. ADI, we can see key low of resistance all year. Earlier, we were talking about, the Dow turning resistance into support. This is what we're talking about. So ADI, this area acts as resistance. After it breaks out, which doesn't really do much, now it's acting as support. So don't really love it here. You want to, that this 260 is the new high. Nothing here, you know, just nothing here. Wait for this thing to continue to be range bound. Let this 260 set up. Just move on for now. To buy this 250, best case you're getting a move short term back to 260, and realistically you're out to 240. So it's 1-to-1, middle of the range. Lower high after putting all-time highs, just on to the next. And this is something we're going to continuously see with a lot of these ideas. Market has been extremely easy the past few months. And it seems the last week or two, all these great ideas are they've already occurred. And now it's kind of the B setups, C setups, or just thinking that you need to be in names because the market is grinding or inching higher. So a lot of these ideas are going to be passes because they're not A plus. And there's nothing wrong with that. It's just right now, that's just what the market's giving us. But we don't want to just buy C setups because we can't find anything else to buy. Sometimes you have to wait. So ROK, I have these horizontal lines drawn for resistance, but I'll just draw this wedge here. We can see the wedge forming. Really want to see this break of this 350. But again, break 350. Again, they're on a 360. Definitely getting tight, but $10 upside or $15 upside from here. Realistically, 10 points of downside. Pass. ADSK. Let's see what we got going on here. All right. Let's switch to a weekly because it's a pretty broad pattern here. So far among the five we've gone over from the top member ideas, this ADSK looks the best so far. Again, this is a weekly chart. It's going back the last 5 years. ADSK has been battling with this 330 area for quite some time. And we're seeing, back to back to back inside weeks in it as of after this, big run up. So that's what you want. You want to see that consolidation before that expansion. You kind of see it here. We got, 6 weeks of consolidation, tight little inside weeks, and you get that pop. Again, it gets smoked, but this is more likely on some news. And then you have good earnings, snaps back higher, key resistance level, tight earnings flag, looks good. Just really want to see, like this candle here, this bullish engulfing candle. This is what you want to see, the weekly candle of this break. You don't want to see this thing tickle 330 and close the week at 333. You want to see, like these Tesla candles. When this thing broke, it's as clear as day, the breakout was in play. If this candle was here, like you kind of see here, name's not ready. But this is buyers are ready. So for ADSK, this is the candle you want to see through that break. Again, this is a week, but visually that's what you want to anticipate. You want to anticipate this big candle through this breakout. Next, we got Dick's Sporting Goods. All right. This 240 is seems to be the key spot here. Blue sky breakout. Again, you can see back here. Talking about these breakout stages. We see this flag. Again, this could have been a topping pattern, even right here when it breaks down. Definitely could have, tricked some people into thinking that this was the new breakdown stage. This is, the example with NVDA. NVDA has that big run up. It's in this consolidation stage. And if it breaks down, that's the breakdown stage. It breaks up, new breakout stage. So we're seeing that same thing again. Again, this Dick's definitely a little bit of a tricky name here. Still breaks macro support and snaps right back. So a little bit of a dirty name. I'd wait for 240 or just probably pass on it for now. I think there's some better setups out there. Williams Sonoma. What do we got going on here? All right, we got lower highs forming here. Kind of a wedge forming. Again, would have much more rather see this move get back up to 220, showing that the buyer is still strong. You can even see, you can see this pretty clear trend line that was drawn here, getting pretty close to the trend line. This is not really the area you want to be looking for a breakout. This is key support, not where you're looking. But for this name, just wait for 220. It might not be ready for months. And maybe it breaks this, comes back to 150, whatever it does. But it's so much easier to wait for this breakout than to try to muddle around in here. And again, best case, you're getting that move to there. And that's like when we were trading this Walmart, and we've traded it very well both times, we knew it was range bound. So we took the buy through 100, sold it at 105, we bought back 96, sold in this area. We knew it was range bound, and we were trading that range. So that Williams Sonoma, lower highs recently, multiple times pulling the support. The more it comes into support, more likely it's going to break support, just like the more it gets up into resistance, more likely it's going to break higher. So Williams Sonoma, pass again. Again, unless you're already in it, from 160, 170, sit through this little shakeout, but you're not in it, pass. Datadog, big day today. I know Eric was calling this one out. He's more likely already in it. So if he is, that's great. Stick with it. Break even stop here or prior low a day. And you more likely get a move back to this prior high. Again, expect that to be resistance. expect to take profits into that move. So if you're already in it, great. If you're not in it, nothing to do. Yum, another one of Eric's ideas. Again, I believe he got him through this 150, if I'm remembering correctly. Third day up, fourth day up, looks phenomenal. You're seeing, marginally kind of pushing through these like higher highs, just marginally, but still good to see. Eventually, you get to move to this 161. So try to stick with it till then. Car. This was a name that I tried buying while I was in Italy, hence my very subtle green shirt that I'm wearing. We had a nice little move on the day in question that's highlighted in yellow. We can see this was the base that we were looking at. I'm going to try to zoom in more so it's easier to watch or follow along. So we can see the key resistance area of this base. Bought up through it. Nice pop first day, which is great. Inside-ish day. Nothing special. This is not what you want to see from a base break. As a result, got out today. I think it was like a 1.5% loss. No big deal. But that's again, we needed to see the break of this 168. See the notes here. Needed to see this break, did not get it. The base break is not ready. Car is off the radar for now. This is more likely the broader base it's going to be forming in. And really 168 is the spot. But again, it was a shot. Shot was missed, and it's off the radar for now. Would want to see more of a pull in closer to 150 at a better price, price than buying that 163. So no big deal there. Lesson learned. Next up, we got Adobe. Hard pass. Looks like more of a short. Short this 328 break of that. It's more of the trade here. Not really what you want to be looking for in an extremely strong market. If this is underperforming the market, this is a tech name. Tech is at all-time highs. Nasdaq's all-time highs. Adobe is pretty much after the two big lows. So hard pass. This is not the support buyback you want to get involved with. You want to focus, if you're focusing on leaders of the market, leaders of the sector, leaders in the space. You don't want to go leaders in the sector, laggard in the space. You're not going to get the follow through. It's a sale with a bunch of holes in it. EDU, China has been on fire. My favorite name of all time, biggest long-term holding Baba, doing insane numbers. Baidu, this break of this base, insane. Again, we're talking about parabolic runs. This is as parabolic as it gets, at least Baba, and pretty parabolic as well. But you can see, and again, I'm expecting at some point for this, slow dread to come. We see these big run-ups, it pulls in just as long. Major run-up, pulls back in. Major run-up, I'm not expecting this to magically go to 300. It still will eventually have to have that kind of painful pull down. Baidu, this is even more vertical of a move. Expect, or version of the mean, expect to move back to 110 in the next couple of months before that next climb to 200. EDU still in the base, and it's great to see that it failed today because if it would have went after that gap up, would have caught everyone kind of with their pants down. But big base here, year-long base. Think of Intel, not China name, but think of this year-long base example. When these bases break, they go. Again, Intel was on, the government investing, NVDA investing, major news takes out of the base. EDU, same duration in the base, year plus base, gap up, fails this 56 here. Great to see. Very clearly a seller of 56. These Chinese names do gap pretty crazy. So I would not expect when this goes for it to perfectly open under 54, 56 and push through. More than likely the day that it goes, it's going to gap above it and gap and go. But this is a big base. China has been on fire. When China gets love, or that spotlight gets shine on China can run. So we definitely want to keep this EDU on the radar. and just focus on that 56. Again, still a big range here. This is a 10% range. So this isn't, an easy kind of walk in the park kind of trade here compared to, Walmart was a walk in the park trade. We bought 96, risk was 95, risk 1%, no big deal. CDU, you're buying 56 versus pivot, 10 plus percent. If you're in these kind of trades, you got to be thinking selling, 70, 80, where you're making a real move. It's not like you're buying 56 and selling 58 day one. It's not gonna work out well for you. Again, Shell, we talked about my favorite chart, macro wise, just for this pattern. Bida, we talked about for that example. This BKKT, one of our members is trading it today. I have no idea why. This is the most disastrous of a chart I could possibly imagine. This is not the names you want to trade. This name is as garbage as they come. Again, the member made 30 plus percent. So super pumped that you made that. But these are the disaster names that can blow you up. You could put a gun to my head and I'd like, pull the trigger. I would never buy this name. This is never a stock you want to trade. This thing has more likely been split a couple times. 25 for one, so it's never really traded at 1200 a share. Divide that by 25 is what it actually traded with. Companies that split their stock like this, garbage, garbage, garbage companies. This name is up 40% today because they added some crypto guy to their board. That is not newsworthy action for a stock to increase by 40%. That one individual was added to their board. They could add Elon Musk to the board and it shouldn't have that big of a move. I take that back. Actually, it probably would. But whoever this guy was, Mike something, I don't know who he is, but this is not a 40% move in a major company. This is a dog shit stock. And that's why it had such a big move, because there's nothing about this company that's working that this new person is going to reinvent the wheel. No, it's a piece of news. Things down 99% since it came out. The person who bought this thing, don't ever buy it again, please. So again, garbage company, garbage stock, phenomenal move, made a lot of money in it. Don't go back to the well. This is like the worst stock I've ever talked about on the chart talks. Hood, talking about these parabolic moves, insane move lately. Again, we talked kind of about like potential topping stage in NVIDIA. This is a similar example. So you have 100 plus percent run up since April. If you think back during COVID, CEO of Hood was like the most hated person on the planet when they, wouldn't let people short GameStop. I'm sorry, wouldn't let you sell GameStop during that little era. This guy was the, villain of Wall Street. Now he's the king of the castle. Again, price action is what dictates that. This guy's the king here. And, people want to spit on him in the street when it was down here. So just know, they love the NVIDIA CEO because that's the stock's here. When it's down here, they don't care. But Hood, phenomenal move. Again, talking about that NVIDIA, this looked like a topping pattern, but could not break that support area, could not break the red line, and breaks back out. So it's still in the breakout stage. It's pretty much in a new breakout stage. And you can see the buyers, this snapback move today could not even break the prior resistance level. And I know one of our members got shooken out. And it sucks when this happens, but these are these parabolic moves that get traders to chase these moves and push the market higher. And this is when you don't want to do that. Wherever you got in and you sold it on that day, you made money. And it sucks that you gave it away. It's probably going to go higher from here. Is what it is. You can't chase it up here. It just you gotta move on. Take the name off your watch list. Don't look at it for a couple months, and move on to the next names. Met, we got this move through this 82. Definitely see it. Definitely pushes through there. Probably tomorrow, but this is not an all-time high break. It's kind of middle of the range. Best case, you're going to get a move initially to 85. You're going to see some resistance there. Then you're going to move back to this 87. You're going to get resistance there. So best case, you got a $5 move into prior pivot highs. If you can risk $1 here, you can buy 82-ish versus 81, get 5 to 1. Okay, I see it. But again, we're talking about we want to focus on the best. Right now, the market is not giving us the best setups. Very, very selective right now. HII, just kind of chopping around. We were looking after this 272 a few weeks ago. Hasn't done anything since. I don't see what the setup is now. Yeah, stretching here. HII, just pass. COR. Let's see. Is this blue skies? Yep, blue skies looks good macro wise, but technically the retest. So all-time high. These two times can't really get up there. This one, this was, I guess, Wednesday. Not a great sign. Opens at the breaker level, gets destroyed, gets smoked. Just 20 points in a day. Snaps back there, okay, but still, this is the retest. This is still too close to expect, a break of 310 and a move to 330. Maybe it pushes 310 tomorrow because it's so close to it. You get that, kind of like this candle follow through tomorrow. If you get a big break on it, big break on volume, and you really like this name, and you got to be in it, and you're buying 310 versus 305. Okay, I get it, but I wouldn't expect the fireworks just seeing this big bearish engulfing candle at the level. There's probably still a big seller there. Maybe it lifts a little bit, but still the retest. We got Apple, Mickey Mouse flag here at the retest, pass. This is retest. All-time high, retest, pass. Apple, amazing name. We all know that, but this is the retest. In time, let it push through 260 tomorrow or this week, tickles it a point or two, comes back in and really sets back up. Third, fourth attempt, end of October, early November, all for it. But right now, pass on the retest. Shopify, let's get rid of all these arrows here. If you got in it today, off this kind of reversal move, you're in it. Awesome. If you're not in it, pass. We got, pretty big range here. 157 is going to be the key level. And we go back. Again, we talked earlier about that 2022 market. Shopify at the time was a leading, tech name and got that breakout, looked phenomenal. And we're looking at it 3 years later. Look at what this thing got to go through. This thing dropped almost 80%, maybe even more at its low. So this is the painful reality of when you individually long-term invest in individual names, is these are normal realities of it. And this is why I try to focus on buying the indexes and teaching you guys to buy the indexes, because you don't have to sit through this pain. Is not a walk in the park. Shopify increased by 300% in 2 years from this low. Super strong name. Loses 90% very quickly. A year or two does nothing. 4 years later, still not back at all-time highs. So does it push the all-time highs? Sure. This 160 looks pretty good. But this part, and this could even happen now, not this, tomorrow, but this is a move that you can still see from the NVIDIAs, from the Apples, from the Teslas. This will happen at some point in any of your favorite names, especially when the market does this for very long. This seems impossible. And just when it seems the most impossible, like thinking of Tesla 200 right now or thinking NVIDIA below 100 seems insane. When those ideas seem insane, that's when those things can really happen. And that's why having stop losses in saves you from this pain. Because if it's going to go there, it's going to go lower. For me, for Tesla, I like it because it's up. If it's back at 360, my price is more likely going back to 250. So I don't need to sit through the downside. I want to get out when I start to see that. And that's hopefully what you can do as well. So moving on, we got this Vive Again, Shopify, just wait for kind of skipped over really quickly. Wait for 160. Nothing to do right now. Don't waste your time on it. Wait for 160. Let it set up. Circle back then. Vive, we got pretty much this 300 breakout. Middle of the range here. We got a big, big base here. This is a massive base, kind of like that Roku base. Again, Roku is just much lower in its overall chart than where this Vive has been. It's falling out of the base, but this is like that Intel. This is like later Intel. Intel had that big gap up, and this is like what you should expect from Intel for the next quarter. 32, 28, 38, 22. Expect that chop. Vive, kind of same thing here. Just chopping around here. Wait for the confirmation of the break. I'm just going to round up and call it 300, but it still has that slow climb back to these highs. It's not going to really do much until it clears those highs. And that's why a lot of the top I focus on, I want to just be buying it when it's like over here. When it's going to break this level, much rather be involved here where it's less of a fight than here. It's going to fight all of this prior price action to get back to here. So it's got a lot more of a workout ahead of it than this break here. So Vive is okay, but again, just wait for the easier setups. Last but not least, this snow. Wait for 240. We're talking about these big bases. Sorry, I'm jumping around here with the chart. Wait for 240. It's been, going on 1, 2, 3, 1,000 days under 240. Who cares about 225? Who cares about 226, 227? Wait for 240 because this move, this break and close above this 240. That's when you're going to get the move. Look at this base here. This base, talking 100 points. So if and when we a break and close above 240, I don't know if you hear my dog barking in the background. He agrees. You more likely see the run up back to prior. So wait for 260, get that move back to 400. Probably takes a year or so to actually get there. But right now, it's kind of no man's land. So wait for the key level. So again, before going through all these ideas, I emphasize that a lot of these are going to be passive, and that is okay. That is a part of trading. There's going to be times when your watch list is 20 names and you can't figure out which one to buy because they all look so good. And there's going to be times when there's 20 ideas and I'd take one or two of them. For me right now, Shell through 74, NVIDIA 184, 184. Those are the only two names I really care about buying in the week ahead. The rest are just okay setups unless it's really a must. Big thing, BKKT, garbage stock. Please don't ever trade this thing ever again. Get away from whatever these names are, whoever you came across this. Don't trade these names. This is just disastrous. But other than that, still a strong market. Don't fight the trend. Keep it very simple. Continue to call your ideas out. That BKKT, we piggybacked and traded that very well. You made a lot of money in it. When you speak up, we can help. If we don't know what you're in, just, very little that we can do. So don't fight the trend. Keep it very simple. And we'll see you guys in the chat.